Ever notice how the stocks that explode higher are really the ones plastered all over CNBC? By the time everyone's talking about them, the best gains are already gone. That's why today I'm sharing 3 strong buy-rated stocks that are flying under the radar, but not for much longer. They represent different industries and different price points, but they all have one great thing in common. They're all poised for serious outperformance. That's because each of these stocks has earned an A rating from our Zen Ratings quant model. Going back to 2003, our A-rated stocks have delivered average annual gains of 32.52% a year. So if you've been searching for potential winners, you're in the right place. Quick intro. I'm Steve Reitmeister. I've been investing for over 40 years, analyzing the stock market and how to outperform. I spent many years as editor-in-chief at Zacks.com, sharing insights with millions of investors. Now I'm a partner at WallStreetZen.com, where I help build a quantitative system to allow investors like you to easily find quality stocks. And that matters because I'm not just sharing random stock picks today. I'm showing you names where top-performing Wall Street analysts are also piling in with conviction, the kind of setups that don't stay hidden for long. If you like videos like this one, then do me a favor and hit that like button down below. It helps me know what type of content you want to see in the future. Our first stock is PTC Incorporated with a symbol of PTC. Now, if you're not familiar with the company, don't worry. That's exactly why it's on the list, because there is greater opportunity in underfollowed names. PTC operates in the software space, specifically product lifecycle management and industrial Internet of Things solutions. Think of them as the behind-the-scenes technology powering how elite manufacturers like Lamborghini design and build their products. Here's why it matters right now. They're rolling out new AI-driven innovations in their Flex PLM platform to help auto manufacturers and industrial companies modernize everything from product design to manufacturing processes. And Wall Street best analysts are taking notice. Right now, 7 analysts we track issue ratings on PTC, and here's what's impressive. It has 4 strong buys, 2 buy ratings, and just 1 hold. That's 86% buy or better sentiment, but it gets even more attractive when you look at who's behind those recommendations. First up, we have Blair Abernathy of Rosenblatt, who is ranked in the top 3% of all analysts based on her stock picking performance. She has a 220 target on shares, highlighting the company's expanding AI capabilities and industrial Internet of Things momentum. Even better is the top-performing analyst from Barclays, sporting a strong buy rating with a 233 price target. That suggests more than 30% upsides from current levels around 174. When top-performing analysts like this cluster around a stock, you pay close attention. Now let's talk about the fundamentals, because this is where PTC really shines. The Zen Ratings quant model confirms what these top analysts are seeing, because PTC has earned an overall A or strong buy rating. This puts in the top 5% of the greater than 4,600 stocks that we track in the model. Looking at the component grades, these are 7 key areas that drive long-term stock picking performance. It scores exceptionally well for financials with an A rating. This means the company is exceptionally well run with strong balance sheet metrics. It also has scored Bs across other vital areas like growth, sentiment, and AI factors. That last one is particularly interesting because our AI factor uses advanced algorithms to detect subtle patterns that lead to outperformance that are not obvious to the human eye, a powerful step in vetting higher quality investments. Now let me be transparent about the risk here, because no stock is perfect. PTC operates in the competitive enterprise software space, where you're dealing with long sales cycles and customer concentration risk. If major manufacturing clients delay technology spending due to economic concerns, that greatly impacts PTC's growth trajectory. The stock has also had a strong run recently, trading near 52-week highs, which means there's less margin for error if execution stumbles. And like many software companies, PTC's valuation depends heavily on maintaining the current growth rates. Any disappointment in guidance could lead to a stiff correction. That being said, the strong fundamentals noted by the Zen Ratings, along with the conviction of top Wall Street analysts, suggest that the market still hasn't fully priced in the AI-driven opportunity. Bottom line on PTC, this is a fundamentally sound analyst-backed play on AI-driven industrial transformation that still has meaningful upside potential ahead. Before I move on to stock number 2, I wanted to share something cool with you. The same ratings model I used to find the stocks in this video has previously identified 407 stocks that have doubled in price or more. Right now, we have a special report featuring 3 of those high potential stocks. The link to this free report is in the description below. All right, on to the second stock, and this one's going to surprise you. Bluebird Corporation with a symbol of BLBD. You know those iconic yellow school buses? Well, those are made by Bluebird. But here's what makes the stock so interesting right now. Bluebird isn't just making traditional sell diesel buses anymore. They're driving the electric school bus revolution, enjoying thriving replacement demand and accelerating adoption of alternative power fleets. And recent earnings results prove the transformation is working. Bluebird just delivered strong Q4 and full 2025 results, and Wall Street responded enthusiastically. The four analysts we follow covering BLBD are pretty psyched on the stock. It has 3 strong buys and 1 buy rating. That's 100% buy or better sentiment. Gregory Lewis of BTIG is in the top 4% of all analysts based upon his stock picking performance. He recently reiterated his strong buy rating with a $65 price target. That represents 30% upside potential from their current price around $47. Now you might be thinking, Steve, school buses, really? But check this out. BLBD has exhibited a fantastic track record of past earnings growth at nearly 55% annually over the past 5 years. That's the kind of consistent growth that drives stock prices higher and compounds wealth over time. The Zen Ratings gives Bluebird an overall A or strong buy rating, putting in the same elite top 5% category as the last pick. Looking at the component grades, Bluebird shows standout performance with A ratings in both value and financials. That value rating is particularly interesting because it means that despite its recent strong price performance, BLBD is still attractively priced relative to its fundamentals. The A in financials tells us the company is operationally sound with strong metrics across profitability, cash flow, and balance sheet strength. I should mention safety receives a D rating, which warrants attention to certain risk factors. This is a smaller company in a cyclical industry, so there is a bit more volatility here than a more conservative large cap stock. But here's what really caught my eye. Bluebird is currently the highest rated stock in the auto industry. Personally a fan of the group going forward, given the odds that interest rates keep moving lower, which greatly benefits the industry. Now let's tackle the risk with Bluebird. First, there is the cyclical business tied to school district budgets and government funding. If the federal infrastructure spending slows or education budgets get squeezed, school bus purchases will get delayed. Second, Bluebird is a smaller company with a market cap just under $2 billion. That means higher volatility and less liquidity than large cap stocks. Third, the transition to electric vehicles requires significant capital investment and comes with execution risk around battery technology, charging infrastructure, and supply chain management. And finally, tariffs on important components could pressure margins if the company can't pass those costs along to their customers. Bluebird has navigated these challenges well so far, but investors need to be comfortable with the cyclical nature and small cap company volatility. The combination of electric vehicle tailwinds, federal infrastructure spending supporting school bus upgrades, and Bluebird's dominant market position creates a compelling setup. Just understand you're taking on a little more risk than the average large cap stock. This is one of those under the radar opportunities that could deliver serious returns as the electric school bus market expands over the next several years. Quick pause here. If you're finding value in these picks and want to catch more timely setups before it's too late, hit that subscribe button below and the notification bell. I share new stock picks and market insights every week, helping you stay ahead of the crowd. Let's move to our third and final pick, and this one's a bit different. Our third pick is Amneal Pharmaceuticals with the symbol of AMRX. I'm going to call this the jewel of today's list, and for good reason. Amneal is a specialty pharmaceutical company that makes both generics and branded drugs with a focus on complex dosage forms. We're talking injectables, inhalants, ophthalmics, not just a simple tablet form. These products are harder to manufacture, which means there's less competition and better profit margins. It's a sweet spot for pharma where you get growth without betting on all the tricky FDA outcomes. Let me start with this. AMRX is the highest rated stock in my Zen investor portfolio. Not just A-rated. This stock ranks in the 99.56 percentile. That means it's in the top 0.5% of all 4,600 stocks that our system analyzes. When you see a ranking like that, you pay serious attention. Amneal just posted another strong earnings beat, their fourth consecutive beat averaging 33% better than expectation. But here's what's really driving the growth, the launch of Croxant for Parkinson's disease. This is a major new product that management highlighted as a standout contributor. Plus, they have other newer products in injectables and complex medicines ramping up. Right now, Amneal is expected to grow earnings 38% year over year. But remember, they've been beating estimates by an average of 33% a quarter, so actual growth could even be much higher. Check out the analyst sentiment. All three analysts covering AMRX on WallStreetZen.com have strong buy ratings. That's 100% strong buy consensus. Even more unanimous than the other two picks I talked about today. Even more impressive is who is behind these strong buy ratings, like Glenn Santangelo from Barclays, who ranks in the top 24% of all analysts for stock picking performance, or Chris Schott from JP Morgan is also pounding the table of AMRX. He's in the top 16% of analysts for his stock picking prowess. The Zen Ratings also tells an incredibly compelling story about Amneal. Yes, it's a rated strong buy stock, but as I mentioned, it's not just the top 5% of stocks, it's actually in the top 0.5% of all stocks we track. But drilling into component grades is where it gets really interesting. AMRX scores B ratings across value, growth, momentum, and sentiment. That's top 20% performance in 4 critical categories. The B in value means despite the strong recent price performance, AMRX is still attractively priced relative to its fundamentals and earnings growth prospects. The B for growth confirms the consistency of their growth in the past, which is often quite telling of what happens in the future. The B in momentum tells us the stock has positive price action. It's not fighting the tape. And the B in sentiment reflects the unanimous strong buy consensus from analysts and other smart money activity in the stock. Here's additional context. Amneal operates in the pharmaceuticals industry, which has strong fundamentals overall. And within that industry, Amneal stands out as one of the top-rated names. The combination of complex dosage forms, creating competitive moat, consistent earnings beats, and the exceptional 99.56 percentile Zen rating creates a truly compelling setup. Now, let me be transparent about the risk, because even elite-rated stocks have risks you need to consider. First, Cronk's success is still in early stages. If patient uptake slows or competition emerges in the Parkinson's market, it could impact the growth trajectory. Second, a portion of Amneal's business is in generics, which faces constant pricing pressure. If generic pricing deteriorates faster than expected, margins could compress across the segment. Third, we're seeing some insider selling activity. Recent data shows insiders have sold more AMRX shares than they've bought over the past year. Now, insider selling can happen for many legitimate reasons like portfolio diversification, tax planning, liquidity needs, etc. But it's worth noting because when insiders are aggressively buying, that's typically a very strong bullish signal. The C rating and safety also warrants your attention. This is a smaller company with more volatility than well-known large-cap healthcare stocks. And the pharmaceutical industry always carries regulatory risk around drug approvals, pricing pressures, and healthcare policy changes. That said, here's the counter-argument. Their complex dosage forms creates a real competitive moat. They're beating earnings consistently quarter after quarter, and that 99.56% percentile Zen Ratings tells us the fundamentals are overwhelmingly positive across a thorough review of 115 different factors. The analyst community clearly sees the same opportunity with 100% strong buy consensus. I'm so confident in AMRX that I recently featured it in a dedicated video exploring the investment thesis in even greater detail. You can find that link in the description below. This stock has the look of a potential double over the next 1 to 2 years. This is especially true if they keep up those robust earnings beats and continue expanding the complex products portfolio. At current levels around 13 and strong fundamental momentum, Amneal represents a compelling risk-reward for investors willing to handle some of the pharmaceutical sector volatility. So here you have it. 3 strong buy-rated stocks flying under the radar. PTC Inc, the AI-powered industrial software play with 30% upside potential backed by top-tier analysts. Bluebird Corporation, the electric school bus leader, delivering explosive earnings growth in a transitioning market. And Amneal Pharmaceuticals, a top-tier stock with several near-term catalysts, a great track record, an excellent risk-reward for investors willing to deal with inherent pharmaceutical sector volatility. 3 different industries, 3 different price points, 3 different risk profiles, but one common thread. Strong fundamentals, analyst conviction, and meaningful upside potential. Remember, these all earned A ratings from Zen Ratings model, which historically identifies stocks that delivered 32.52% average annual returns. Now, that's not a guarantee, of course, as past performance never is, but significantly improves your odds of finding winners before the rest of the market catches on. And as we discussed, understanding the risk is just as important as understanding the opportunity. Drop a comment below and tell me which of these 3 stocks interest you the most. If you want to stay ahead of the opportunities like these, we send out a free email every Sunday featuring our top stock picks for the week ahead. The link to subscribe is in the description below. It's completely free, and you'll get actionable ideas delivered straight to your inbox. And in case you're curious how I found these stocks, they all came from the wide range of data and tools on WallStreetZen.com. This includes proprietary coverage of Wall Street analysts, Analysts, where we actually share the performance track records and their top picks. On top of that is the 115-factor fundamental review of our AI-driven quant model, the Zen Ratings. You can get free Zen Ratings on over 4,600 stocks at WallStreetZen.com. Go ahead and enter any ticker to see these vital ratings on our quote pages. If you like this video, I strongly suggest you follow up by discovering another under-the-radar ticker I'm watching right now. Its price action and earnings growth is kind of like an AI startup, but the industry will definitely surprise you.